when you have a centrally directed economy like Japan did or like China did, it goes great for a while, or even Nazi Germany did. It goes great for a while until it doesn't. But the thing about a free market capitalist democratic system is it's a bloody mess. It looks like hell. But over time, it develops strong foundations because it's, a billion people making everyday decisions all the time on what's good, what's not good, and things like that.
All right, let's get started. Hello, everybody. Welcome to the Angel Research Podcast. My name is Jason Freer, not Jason Stutman. I'm here with Chris DeHaemer, a.k.a. DeHaemer.
How you doing?
Good. Let's jump right into it. I had sent around this meme that's been going around the TikTok and the social media stuff of people declaring that we're in a silent depression.
Right.
And
right.
so have you seen this?
I have seen the
Okay,
meme, yeah.
So the guy, there's actually a couple people that have done it, but basically the gist is he's taking numbers from 1930,
right,
which, I guess, the Depression lasted from, 1921, 1930, or, to like 32, 33. So he takes 1930 and compares it to 2023, compares, the average cost of a house, the average cost of a car, average cost of rent, and then I guess average income.
right.
Here, and basically says like all of these numbers are worse now after adjusted for inflation. It's getting shared around a lot. So I'm here to debunk it, unless you want to help me
debunk it.
Well,
let's debunk it.
So here's the issue I have with it is, one, I actually started looking into the stuff and. So there was actually another one that said the average salary was like $4,200 or something back in there. The truth is, they don't really even know any of this data, right? Like the census came out in 1930. There's some sort of various degrees of, stats that you can get, but it's not like it has been, recorded by, the BLS or whatever.
A lot of your stats started in the 70s, right? And a
right.
lot of them started even in the 80s.
Right. So, I mean, you could give it – there's just a couple of stats that I looked up here that I want to share with that like, first of all, I don't think anybody wants to go back to the 1930s, right? I mean, there's a lot of young people sharing this meme out there. Do you think their grandparents or their great-grandparents think that it's worse.
30s were great.
It's worse now than it was when there was bread lines.
Unemployment was 25%.
Right, exactly. That was one of the stats I have. So unemployment now is like under 4% still.
Yeah,
okay,
right.
So that's the huge driver of it.
Right.
The other driver of it is, just talking about cars, right? Like 18% of households owned cars in 1930, and as of 2021, 91% of households own cars, right? So if you...
I heard that like the average household owns like 2.7 cars.
Well, here's the thing is, I think that's what it is. It's just one or more cars, right? So it's hard to tell because there's on trucks and stuff like that. Some people don't have a car, but most people have a car these days.
Yeah, we have 4 of them. I don't know.
We have 3 for a house of 2 people and 2 kids, but would you want a 1930s car too?
Well, also,
no seat belts,
no radio, no air conditioning.
No air conditioning. How many miles
are extra, right?
Yeah,
you get 30,000 miles out of it or something before you need to redo the head gaskets and all that stuff. Yeah, cars these days. I mean, they're selling like Hondas. Up the street has 205,000 miles on it. I'm like, I'm not buying a car with 205,000 miles.
Well, exactly. And so back then, and keep in mind too, a lot of these comparisons are based on new cars.
Right.
I personally, I did buy a new truck 2 years ago, but for the longest time, I only bought used cars, right? Because the value of you just don't get it as soon as you drive it off the lot. It drops, whatever percentage. A lot of people buy used cars. That's why Carvana went crazy and all this kind of stuff. the reality is that the price of new cars have gone up.
It's
I
gone
mean, used
crazy.
cars with the pandemic, yeah. But
So have used cars.
yeah,
They
so
thought they were going to drop, but they really haven't.
right. But to compare, car ownership and the price of a car
Right.
between now and 1930 as some sort of evidence that times are worse is just ridiculous. And then translate that to a house. People, not many people even owned homes back then. Did you have a bathroom in your house in the 1930s?
Right,
That was
right.
probably a luxury.
Sure.
A refrigerator?
Right.
No, probably not.
No.
You know,
Electricity.
electricity,
telephone.
yeah, all that kind of stuff. The size of a house has gone up dramatically, even just in the past like 20 years. From about 1,500 to 2,500, I think, is the average. Because we've talked about it before. People want to sell these McMansion things, and that drives up the average cost of the house. So,
Well, the cost of land's going up. We have 3 times the population in this country. Things like that.
yeah. So I'm in no means saying that, everything's hunky dory, but it's this meme seems to be really taking off amongst like everybody, right? People
Right.
that want to blame Biden,
Right.
for some reason for that, or I guess you can say, oh, I'm going to blame Trump. Or they're going to blame capitalism is the thing too. Capitalism.
Well, the thing is about capitalism, it's like brought more people out of poverty than any other system. Since the USSR collapsed in 1990, something like I think 4 billion people. No, I think it was the economists ran a thing on. I think it was like 2 point something billion people came out of absolute poverty into where they could feed and clothe themselves and things like that.
Well, yeah, and these are all U.S. numbers, which people don't realize. If you make, I think, over $30,000 a year, you're in the top 1%
Right.
of the world income.
It's crazy. All you have to do
So-
is travel to, Kenya or India or Mongolia or something and realize it, and you'll realize it right away that if you're born in, a Western country, you're very lucky.
Yeah, absolutely. So how does that play into the overall debt situation? Because, inflation still is an issue. Like,
Right.
I think I saw we've added like over $1 trillion to the debt just since like June.
The
Since-
deficit has doubled this year that people don't. We're talking about the average annual spending of the federal government,
Right.
not like the debt
Right.
that we owe, like 31 trillion, but every year we spend more than we take in. And so the difference between I think we're spending 6 point something and we're taking in 4 point something, So trillions of dollars. That's new to. I used to remember it would be 200 billion or something, but now our annual deficit is in the trillions of dollars at a time when interest rates are up. So the cost of what we pay to service that debt is now increasing dramatically.
Yeah, and so and they can't drop if they drop interest rates, then inflation will continue to come.
Well,
out of
there's a
hand,
very
so-
real possibility, and I'm sort of in this camp that think inflation's going to have a rebound here because it's what happened in the 70s. They thought they had inflation under control, but then you had all these strikes. I don't know if you remember the 70s, but the auto workers everybody was going on strike because they needed because they saw their take-home pay devalued, so they couldn't buy a house, which sort of feeds into what
Yeah.
you were talking about,
Mm-hmm.
And so they go on strike, and we've seen it already, right? The writers are on strike. The UPS guys got $170,000.
That is crazy, and yeah, I think they're making 80 bucks an hour or something. They're saying like their top drivers are making $170,000 a year. You probably know. I wanted to briefly talk about this, the bus driver situation.
Mm-hmm.
Have you followed it in Howard County? We're both Howard County.
Oh
Maryland
no,
people.
just some of those things you sent
yeah,
around.
Yeah, the bus, and this has been across, people that have kids or follow school systems around the country know that there's basically a teacher shortage.
Right.
And after COVID, there's now like a driver's shortage, right? And so I think like you said, if you're gonna drive around a truck, would you rather drive around a bunch of screaming kids, or would you and make less than just driving around a bunch of packages?
Right.
You know.
Well, yeah, but isn't it the people who drive buses? Aren't they just retired people?
Well,
with
that's what
something
I
to do,
think.
you
And
know?
there's, I mean, there 10,000 people retiring every day. I asked my dad, who's retired, if he wanted to drive a bus. He said, "Fuck no." And so there's a big issue now. There's a big bus driver shortage around, and driver shortage in general, truck drivers and all that kind of stuff. So it seems like UPS is just the beginning. I think they're going after the Amazon guys now and FedEx.
Sure, the Teamsters. But the thing is, since Reagan fired the traffic controllers in like 1981 or something, unions have been on the downswing. They've had no power, right? But now, all of a sudden, there's a resurgence of union power. Like the auto workers, I think in the next month, are going to go on strike here if they don't get a new thing, which, I wouldn't be owning auto companies at this point, at this juncture. And there's a whole bunch of other ones. And so what that does is it raises the prices of goods because you have to pay your labor more, and then that creates a wage price spiral, which revamps inflation.
Yeah. So, I mean, is there any reprieve here?
Well, the only way to stop that is to raise interest rates till you kill off the labor market.
Right.
Which, nobody wants to live through, but that's the way it happened last time. They raised interest rates to, 18%.
But the debt has now what? How much gone up 30-fold since the last time?
Geez, I don't know.
I mean, so
Well, yeah, we're talking $31 trillion. We're talking about debt to GDP at 130%, something like that. It's not good when you have to service that debt, paying it back. So the only way to do that is to inflate the debt away, or to raise, or to stop spending and raise taxes. And this government isn't going to do that. So the only way they can get rid of your debt is to inflate it away.
Right. Or Biden's forgiving your loans.
Your student loans.
Yeah, we had a couple of people at Angel that got their student loans forgiven.
Is that true?
Yeah.
No.
Yeah.
Really?
Yeah. Yeah. So, all right, what's crazy about this what seems to me like it's different this time of the situation, and we've talked about this a little bit, is the population the demographics are shifting, right?
Right.
So more and more people are retiring, and the replacement rate outside of immigrants coming into the country is falling, and these big like empires, even China and Russia, are falling. So this whole inflate and just keep kicking the can.
Right.
It sort of works when your population and GDP is growing at a certain clip.
Well, it's all a giant Ponzi scheme, right? And so what you're doing is you're bringing in more people on the bottom of the pyramid to pay for your retirement and so forth. But yeah, so if you're a long-term investor, if you have 10 years, you definitely want to look at population pyramids. And so you want countries like Mexico or Thailand or India is a good one.
Right.
Like India's baby boom, the bulge is going to keep going until 2055. And they have one of the lowest percentage of people dependent on the young people. It's 31%. So the retired class is lower than most countries. And so India is going to have a boom here. I mean, it's just. It happened in Japan. It happened in China. It happened in South Korea. When your big, egg in the snake generation, hits 28, 29 up until his early 30s, they start having kids. They want to have a house. They start buying, and so they also work really hard, and so that produces a country boom, and we've seen it over and over again.
So where is India in the story versus Mexico? Because India is a lot larger than Mexico.
Oh, yeah. Well, Mexico's dependent on the U.S., right? But India is mostly dependent on itself. It only has, its loans are outside about 3%. It's very self-dependent. They, back in the old days, they didn't want to be dependent on Russia. They didn't want to be dependent on England or the U.S. or whatever, so they developed their own characteristics. And right now they're going through, they're growing over 6% GDP. They have a solid balance sheet. They're innovative. They have the most degrees, STEM degrees, of any English-speaking country in the world. Every year, they graduate all these STEM degrees, and they already have a digital rupee, things of that nature.
And they don't seem to have a lot of the downsides that you hear about from China with sort of the political communist sort of.
Yeah, well,
angle.
when you have a centrally directed economy like Japan did or like China did, it goes great for a while, or even Nazi Germany did. It goes great for a while until it doesn't. But the thing about free market capitalist democratic system is it's a bloody mess. It looks like hell, but over time it developed strong foundations because it's a billion people making everyday decisions all the time on what's good, what's not good, and things like that.
Yeah, it seems like that might be one of the concerns here in the U.S. is that you need those booms and busts, right, to like wash out the system, but it's like every little hiccup, whether it's the government or whatever political class is like trying to even out those bumps and direct it.
Right.
You know what I mean? And
central planning.
Yeah, just creating these like different pockets. Oil and gas prices are now an issue because they're gearing up for the next presidential election, and oil's close to $90 a barrel, and people are paying more for gas. And suddenly, Keith talked about this. They've been draining the SPR to try to drop the gas price, but it's like how much further can they actually drop it without getting into a real bad situation?
No, it's never going to happen again. It's a one-off. So the question is, are they ever going to refill it? That's the question.
Well, yeah. I mean, you don't want to refill it at 90. You'd like to fill it lower, but I mean, you might want to refill it now if you think it's going to go over 100.
I don't think they're going to refill it. I don't think it'll ever happen.
Yeah, well, the reserves are about what they were in 1983. So there is still lower to go historically.
Yeah, well, but also it depends on the type of oil they have and and our refineries and things.
Well, maybe they won't refill it because they want everybody to be on electric cars.
If they started refilling it, it would go against their political themes, right? So you want everybody electric.
Gotcha.
But since 72, for like 40 years, they went every president was like, we're going to be energy independent. And so we finally got there, and now they don't want to be anymore. They want to, because everybody forgot, the gasoline lines and all that stuff.
Right. So and then clearly they forgot the bread lines of the Great Depression.
That's right.
The Great Depression as well. It still boggles my mind that even sophisticated people will have a very short memory about the situation. So what are the big themes going into the end of the year? We talked about the population and Mexico, India. There seems to be multi-year trends. But what about the rest of the year?
Well, the rest of the year, it's very surprising. I pulled up a chart today, which we can show you, of Microsoft. And Microsoft's been on this, it's up 1,000% since 2012 or so. And if you look at the long-term candlestick chart, using every candlestick as a quarter, like every 3 months, you'll see a giant red doji at a double top. I just found this today, and it's kind of concerning to me.
So you're thinking take some profits on Microsoft? Yeah.
So Microsoft's a market leader, right, and has been a market leader here for 10 years. And so if it goes, then your S&P 500 will go, and things like that. And so personally, I like oil a lot. I like emerging markets a lot because the dollar is at it's off a little bit, but it's at about a 15-year high, right? And I think with all our debt and everything, the dollar has to come down a bit. And I think this is sort of like, it reminds me a lot of like the mid to early 2000s in a way, and that if the dollar comes down, you'll have an emerging market run, you'll have an oil run, you'll have a commodities, things you can drop on your foot type of boom.
It's been coming. It's been about time.
it seems like it's been sideways for a long time, right?
Yeah.
And so, like, people say, talking about inflation and real dollars, like if we compare, the last highs in oil, it would be worth, like somewhere around $250 today. So if you can imagine $250 oil and what that would do to the economy, that's pretty scary.
Yeah. Saudi Arabia would love it, I'm sure. All right. Well, I appreciate you chiming in today on the podcast.
Well, thanks for having me on.
Yeah. Do you got anything else you want to share? Short Microsoft,
Yeah,
right? Or short, or just sell it.
Sell Microsoft and buy India.
Buy India. Sell. Okay, you heard it from Hammer. Sell Microsoft, buy India, September 2023. We'll check back in a few months. All right. Thanks, everyone.
Thank you.